Good morning. Weekly update of some of the global stock markets and probably more of an emphasis on Europe, just because I think there's some fascinating things going on here. I'm Rich Paz for Critical Point, Wednesday, March 5th, 8:38 a.m. Eastern Time. This is the FTSE Euro First 100 symbol dollar EFON on my bar chart quote system here. Any rate, negative weekly reversal. I think it's probably put in a top. I don't have any model analysis for you, but I think it's time to back that one off. This is European fund, 2X fund, symbol UPV, FTSE. And what it is it's actually still, the model's still shopping for a level one sell signal. That's the most important kind of sell signal during a year. Should pull back into the second most important buy signal. And I think the long-term trend is up into next year, but it can move sideways for long periods of time. It can have sizable setbacks. I don't care for this gap that if it turns into a disaster here for the U.S., or China, it can become a contagion for the rest of the world, including Europe. And so we may see that much downside, but frankly, I think it's just going to pull back some, goof around for quite a while, but eventually somehow working higher. And that's pretty much my stance for Europe. Next up is, I have another, that was a 2X fund. This is a 2X fund, meaning you make or lose twice as much. Also shopping for level one tops, should pull back into level two bottom. So this looks very similar to the U.S. Forecast. All right. So next up, I got to go to my monthly list here, and we're going to start right out with the global Dow Jones. And bam, doesn't look good to me. I realize that's a gap down and probably means it is going up someday, but I think this could actually fall apart and be down quite a bit, but that's probably more because of the U.S., not necessarily Europe or Asia stocks, global stocks. All right, this is the Italy fund, symbol EWI, put out by iShares. I think it's up into next year. It is time to pull it back some. This is a monthly chart. It can stall out for quite a while before going higher. It can just continue to move higher. I don't know for sure. All I can tell you is I'm long-term bullish, but I have anticipated a setback now and appears to be working. This is the German DAX stock index. Finally got a negative reversal, the best one we've seen since April of last year. Okay. I think it's time to pull it back. I could be missing something, that this is maybe the latest allowed for a minor long-term top. My guess is that doesn't mean it can be negative for the next couple of years, which is a very low probability alternate forecast. But instead, I think it would pull back to the last minute for an LT3 bottom. Okay, and then higher next year and the following year. What's the best forecast this morning? We've already seen the top and bottom last year. It's higher into 2026. We're just seeing traders taking profits and could have some issues from time to time. And it is time to pull back to be in line with the U.S. forecast. So please stay in touch with what I'm forecasting for the U.S. It'll make more sense. India is doing something far more significant than I thought there would be. It's going up, it seems like forever. I think it's going up for another 20 or 30 years. And then Europe will probably be one of the better ones as they see the money rotate around the world throughout the century. But at the moment, yes, the model's still shopping for a minor long-term bottom, doesn't want to give up, but it's getting awful late. That's making me nervous. Can India have problems for quite some time now? And it may be that it's just been too rich, too long, and it needs to have problems for a year or two. But in general, as I look out later in the decade, I think it's higher, and there's a possibility of bottoms this year, and will be higher next year into the following year for long-term swings. Right at the moment, trend is down. You got to be bearish until we get some upside, get some evidence that it has turned around. All right, China really doing nothing much on the Shanghai Composite Index. I don't think it's going to do much at all, but it ought to be an upward bias into next year. But with all the trade wars, the tariffs, the economic issues still in China, and now the coming economic issues of the U.S., in fact, are already here, this may have to back off and consolidate for a while yet. So I don't have any words of wisdom there. I don't have any action to take. I think the upside's quite limited for a while, but I would like to think the downside is also rather limited. This is the Spain IBEX looking really good. It could put in a last minute minor long-term top, pull into a bottom, higher still in coming years. But right at the moment, I'm assuming the top and bottom were last year. It is going higher in the next year. But I'm also assuming this is probably a level one top and coming down for Spain. And it may be down into May, June, July. Like the U.S. market, we may learn, however, that it can hold up better than the U.S. market. It already is. It's already outperforming. People are amazed how well the European stocks are doing compared to the U.S. It's just time to do that. This is the Japan Nikkei index pulling back, still stalling out. It may actually be putting in the better long-term bottom. Relative to a long-term top. It can still be higher next year, maybe even the following year. But I think I'm nervous it's going nowhere for quite a while. It had a very nice run-up. It's been a very nice turnaround for Japan. I am nervous of carry trade issues with Japan, inflation running too fast, interest rates running too fast, and it causes a problem, and that can cause a problem for the U.S. stock market and even global markets on a short-term basis. I don't see a real contagion long-term. I don't see breaking the global system or anything like that. It'll be more Japan's problem, but it just scares others. So we want to watch out for that. But for the moment, I can't call any significant buying here. I just think it probably is going to work higher, so maybe you've got your own ideas when to actually do something about that. Brazil may or may not be a clue of what's going on in South America. It doesn't look like it's doing much of anything, and I'm not expecting anything glorious out of it. Okay, what else do we have? Let's see, that's a fund for Canada. I think I'll skip that and go to the index. This is the large cap fund for China. This looks better to me. It can go up all of this year. Even into first half next year, and then down. But I'm a little concerned that it can top out now in the next few months. So I am looking over my shoulder on China. What might go wrong and stall it? Right at the moment, it's a bull market. It's a warning it can end sooner than it should. Okay? And I just don't know how to handle that. I can't give you any great insight how that's all going to work out, but at least it's bullish at the moment. The trend is up. Starts taking out some of the more important recently monthly lows, that may be a problem. South Korea should have bottomed minor long-term, should go higher to next year. I expect it to be a slower moving, less profitable, but maybe less risky market. And it is time to back off. The whole world is time to back off, and that can give us some problems here for a while. But I think ultimately this long-term bullish stance for the world's going to work. I'm not so sure about U.S. This is Portugal. I think it put in a minor long-term bottom and top ahead of it. Now, what do I mean minor long-term? It's a pattern every 3 to 4 years. It's a kitchen business cycle on the economic side. It's basically a throttle up, throttle down process of the economic boom bust for a decade, okay, the juggler business cycle. I say Portugal is going higher into next year. I say it should pull back now. It may have problems all in May, June, July. It's going to have some sympathy with the U.S. The whole world seems to be that way right now. So I have to be a little short-term bearish here, but I think overall it will work higher into next year unless U.S. really screw things up and unless Russia really screws things up, okay? And that's a risk. That's a problem that we all have to deal with. We can try to be optimistic and bullish, but we've got to be looking over our shoulder what might go wrong. Canada index should have some problems here a little bit, maybe still coasting into a minor long-term bottom, something similar to the U.S. into May on into October. It can stall out for a while, but I think it can hold up better than U.S. already has. And I think ultimately it will be higher next year. We may see global markets outperform the U.S. even going into next year. I don't want to know. I'll rethink that after I find the long-term bottom in the U.S., which we have not found as of yet. Okay, this is another China fund, the CSI 300. It's a 2X fund. Not all that spiffy, not doing all that much. That's a monthly chart. It seems like it ought to be turning up here, but again, I can't be all that bullish China, and I don't care. I think the China economy could improve quite a bit, and the stock market won't. Why is that? Because they're smarter than us in the U.S. They make sure they take care of their people. Their people get a fair shot. They're trying to make a fairer capitalism. And how they're doing that is they're still communists, as supposedly help take care of one another. They're still socialists. and they're just smarter than the U.S. right now on that, okay? But they have their own issues, their own problems and complications, no doubt about it. This is a fund of, that's the CSI 300, but this is a commodity index, and they compare the two for lead lag of how commodities are doing, how is the stock market doing, that they can get you can get a stock market signal for commodities, but also commodities can give a signal for the stock market in China. So do keep it in mind. Commodities are more important in China than here in the U.S. even, okay? What else do I have for you? I guess that's another 300 there. Oh, we got to go to France. The CAC fund index doing very, very well. Should be long-term bullish into next year, maybe the following year. I'm more confident of it than some of these other global index. Looks really good and holding up quite well. Germany's already backing off some now, but I don't doubt it's going to back off. The CAC can back off here in the next few weeks to be in line with the U.S. I don't doubt it can move up and then be back down May, June, July with the U.S., but I think ultimately it could outperform the U.S. this year. Good for France, Portugal, Spain, and probably Germany, even though Germany's kind of been a bit ahead of the curve here of things we can work on. All right, I think that covers that this week. Hopefully this has been some help. This is a little bit new. I come and go with using this. I think I'm going to try to update you in some of these global indexes more persistently than what I've done in the past. And I'm very fascinated with Europe more than I am in the rest of the world in the U.S. right now of some long-term bullish possibilities here. I think they're going to print the money finally, boost their economies, use a little MMT, and they're going to like it. They're going to be happier. I think they're going to build their defenses. That's going to help build business. They're going to be able to go against Russia, and I think that's all good. And here's hopeful that we get a good solution ending to Ukraine in favor of Ukraine. I think that's going to be a better, more optimistic time for the world. But I think we're going to have to be keeping Russia on a chain here eventually for many, many years to come. Patrick Schultz and I saying, Dick Futures results. Have a great day. Thank you.